So hello friends, in first video I spoken about the new series which I have launched, that Freedom at 40, and I'm telling you different level you should know if you really want to retire at 40. And I also told you why it is required to be retiring at 40. The simple reason is not about whether you want to retire or not. It's important because you don't know by 40 or by next 10 years I will have my career, my job, my field of expertise, or it will be made irrelevant by AI and other technology which are coming. And maybe most of the technology you are yourself working on that. So I call most of ID people modern Kalidas because they are cutting the same branch which they are setting, somehow sort of that. But I know they don't have any options. Either they cut it and they get employment for certain days, or they just don't do it and they will be fired today itself. So always dying tomorrow is better than dying today. So this is the scenario. Now in this video I'm going to talk about the insurance, and in this insurance part, the level 0, I'm going to talk in two parts. First part I'm going to talk about life insurance, and second part I'm going to talk about health insurance. So let's begin. So I know friends, most of you are quite knowledgeable about life insurance, why it is needed, how much is needed. I'm going to touch upon some very important questions which most of us either don't know or they might have known, but somebody has not explained the why it is a must. So let's start with the first question, why it is required. Now I'll give you a very simple example. For example, understand, if something happens to somebody today, right, and that person is the only person who is earning in the family, what will happen to the family? The family all of a sudden, after years of hope that my son or my daughter will start working and the fortune of our family will change, will just come at grinding halt. Now life is very unpredictable, right? So what is the way of making predictable, at least financially? So simply, if I don't have, suppose my family has a 1 lakh rupees per month requirement. So 12 month they require 12 lakh rupees. Even suppose 10% I am getting through a return, I need at least 1 crore 20 lakh rupees to generate those 12 lakh rupees, right? Now I can't save that 1 crore 20 lakh rupees today itself, but I can buy a policy which gives a cover of 1 crore 20 lakh. So I can afford the premium of the policy, but I cannot afford 1 crore 20 lakhs lump sum saving today. So in nutshell, life insurance is only for that period when I don't have 1 crore 20 lakhs readily available to cover my family. So instead of bothering about that 1.2 crore, how it will come, I will rather buy an insurance policy by paying some premium. Now, when it is required. Now, some people say that my parents are very well covered, and my company also give me life insurance, so I don't need it. Now, let me debunk that. First thing, most of us going to get married, right? So maybe our parents are not depending on us, but our family definitely going to depend on us. So generally, we take insurance for our family. Now, there is a life insurance till the time you are working in a company. But understand, maybe a certain point you are going to leave that company, join other company where they may not give you insurance, or their insurance coverage is not that much which I require, or maybe certain cases they only give 10 lakh rupees of insurance, but I need 1.2 crore rupees of insurance. So what I'm going to do? I'm going to buy additional insurance of myself so that whether I'm working in that company or not. So if you are planning to get married, you should buy a life insurance. Even you are planning to get married to somebody who is also going to earn, still you should get a life insurance, because maybe once you get married, maybe the other part refuse to work after marriage and you can't do anything about it. So it's very serious general life scenarios that people assume things like, okay, we will be both working and we will generating a lot of money and then we don't require life insurance, or my company and her company or his company are also providing life insurance, so why to spend money on that? Another point, people understand that paying money to life insurance is all loss. Now understand, if I don't have 1.2 crore rupees, but somebody is giving me assurance that boss, if something happens, I will take care of your parents. Like, you can just assume your friend, just you have to give me some money today so that I can cover you tomorrow. I will be happily doing that. The same thing, same concept is a life insurance. Nothing different. The day you will get 1.2 crore in your pocket, you can stop life insurance. So I will tell you, I will answer that question also. Now, how much? I told you already that if you go with thumb rule, people say give this much, that much. Just take today's expenses, multiplied by 10, and that much life insurance you should at least start with. Maybe after you get married, you can increase slightly more. You get children, you slightly increase more. But if you talk today, you should be at least in the situation where if you get say 1.2 crore rupees and part of that invested in mutual fund, part of that invested in FDs, by jointly your family can get 10%, then what is your expenses today multiplied by 10, you should get a life insurance. Keep it very simple. Now, I'm going to talk about the most important part, riders. Now, in life insurance, most of time we forget the most happening situation which may happen for with most of the young people. Now, understand, if a person is going to survive by 40, say they're starting their career at 25, and if they survive till 40, in most of the cases, if they are saving and investing, they will have enough money by 40 that after 40 they may not require the insurance. So what is the risk period for life insurance? It is starting from 25 until 40. That is the most risky time. Now understand, a person who is young, energetic and healthy from 25 to 40 in most of the cases, what can be scenario that he will be no more? What can be the reason for that? Just think about it. It's just he will walk one day and say, okay, he's dead tomorrow. Natural death. So in 99% cases, natural death is not going to happen. Two scenarios going to happen. One is accident and secondly, some kind of illness, some kind of disease. So basically, in life insurance, you require cover from accident and diseases. Now, in most of the insurance policy, you will surprised to know that they don't cover these two scenarios. They don't cover. Now, there is a one more scenario, third scenario, where the person become permanently disabled either due to an accident or due to some illness. In that case, he is not dead, so he will not get the sum assured, but he is not capable of earning also. So basically, this scenario is worse than even the first scenario because this person is alive, but he is medically unfit, so he has his own expenses. On top of that, he is not able to earn. So the person who was asset for the family, he will become a liability for the family. The family not only have to meet their own expenses, they have to meet the medical expenses of the person who become physically disabled. And this scenario is not covered in most of the insurance policies. You read it. You read your insurance policy today itself and you find most of the scenario, it is not covered. But it can be covered using riders. So I'm going to talk about riders. Now riders are basically a top-on or a kind of attachments which you can attach with your basic insurance policy. The good part about riders, they're very cheap, very cheap. So for example, if you're paying 12,000 rupees for your insurance cover, you have to pay 600-700 rupees only for riders. Now what kind of riders you can get? You should get or you must get three important riders. The first rider is accidental cover. Now suppose you are taking a policy of 1 crore rupees, you can easily take a accidental cover of up to 50 lakh rupees. Now what is good part about that? In case of death due to accident, the family of that person will not only receive the basic cover which is 1 crore, they will also receive the 50 lakh rupees of accidental cover while they have to pay only 500 rupees additional insurance cover for riders. So it should always be taken. So second rider is basically called critical illness riders. Now critical illness comes as a standalone policy also, as a rider also. Now if you go for rider, it is way cheap. And in some companies, they cover more diseases than planned. So as I told you, between 25 to 40, expecting a natural death is unexpected, right? Hardly it is going to happen. Most of cases, it's going to be death due to either critical illness, like certain illness, which is going to be life-threatening, or it's going to be like an accident. So if you take a critical illness rider, so this is additional sum assured you will receive. Now, what is the good part about this critical illness rider? It is not given at the death of the person. It is given when the critical illness are diagnosed. So basically, this money going to help the person get the treatment. Now you understand the importance. Most of people don't take it, or they take it as separate policy. Now, why I'm saying don't take a separate policy? Because most of cases we will forget to renew that. But if we keep just one or two policies, it will be easier for us to keep renewing it. And most of life insurance are annual contract. So if you don't renew your policy, maybe 1 or 2 years after the gap allowed or gap period is given by the insurance policy, it will lapse, right? So always take as a rider, so that if you renew the base policy, automatically the rider will also be get updated. And third important part is, which I was talking about, the worst case scenario can happen is permanent disability. Now, in some cases, permanent disability is covered in the main insurance policy, but they mention they will only pay 25% or 50% in certain situations. But if you take permanent disability as a rider in many policies that is available, what happens? They pay you one lump sum at the time person become permanently disabled, so that the treatment can be done, and maybe up to 5 years they pay certain amount, maybe 1 lakh rupees per month or 2 lakh rupees per month, so that till the time the person becomes certain, like in certain situation where he can start working something, the financial of the family will be taken care. Now, there are people who also ask this question, or who think like that insurance is for lifetime. Sometimes they take insurance which is called whole life insurance, like they cover them till 80. Now understand one point, insurance is only to cover the risk during the risk period, which is generally 25 to 40, maybe 45. Once your children are grown up and you have enough money to cover their education and to cover their other requirement till the time they become 80 or 20, 18 or 20, you should not continue your life insurance, because then it is a cost. For understand, if say somebody at 70, their family receive 1 crore rupees, what exactly they are going to do? They already have most of things settled. Children might be earning by that time. So I always believe that by 40, 45, you should stop your life insurance if you have enough money. I told you 1.2 crore. Maybe with inflation and everything, it will become 2 crore or 3 crore. So if you have 3 crore with you, you don't need another insurance policy. Insurance policy is not to make your family rich. It's basically to support the family when you are not rich. So I basically say that after 40, paying for insurance is waste of money, because if you are not, like, it is going to receive when you cannot enjoy, and your family definitely will not going to enjoy, because already you have earned and saved a lot of money for them. Now, certain things I want to talk here about life insurance which you should not do, which 90% people make mistake. That first mistake is money back, LIC. Most of cases, the LIC money back plan, you will get your insurance premium back. Now understand, you don't get your insurance premium back. You pay additional insurance premium, so some part of that you get back. And that part, whichever additional you are paying, is invested and you get a return of hardly 5% per year. Now, why you are wasting your money to get 5% per year? The most important part is to get cover. The more cover is better, not the returning your premium, not the getting a money back plan. So don't go with that. Always take a pure term plan. I'm going to talk about pure term plan, right? So why I'm asking that, the pure term plan is the cheapest way to get your covered. Add some riders on that, and you will get maybe 1,000. And another good thing, a good point, which I do myself, I make my insurance policy monthly and automated, like ECS. So every month I did get deducted 2,000 rupees, which is 24,000 rupees yearly. So I don't even feel the pinch. It is very important in the initial period, because initial period, our cash flow is very tight. So if somebody asks me 24,000 paying once in a year, it may be slightly headache on me, but paying 2,000 rupees is easier. So if I take a pure term plan, add some rider on that, most of cases in 2,000 rupees, I can easily secure 1.5 crore rupees of basic sum assured plus 50 lakh rupees of different coverage. So this way, I can have at least 2 crore rupees of insurance coverage in less than 2,000 rupees per month. The problem solved. Now, another thing you want you people to avoid is a cocktail insurance policy. Now, cocktail insurance policy, they add a lot of things, like mutual fund, some part insurance, then your child education, then child marriage. So many things they are mixing together. See, this is an insurance policy, not a cake cocktail. More things you're going to make, they're going to make a fool out of you because you're going to pay more premium and get less sum insured. So always keep this life insurance straight, simple, forward. I need term insurance, cut the crap. Best part, I will go for riders which are not very costly, and I will definitely avoid this kind of child education, child marriage, and going for and all these emotional kind of ads. These are all crap. So don't never ever go for them. Just go and ask, I want a term insurance policy of 2 crore rupees. On top of that, you add 3 riders, which I told you, we're done. So today, if you already bought, just go and review that. This is never a late, because these policies are for emergency, and just making sure when the emergency arises, these policies serve the purpose for which you have taken them. So that's all in this video, friends. Next part, I'm going to talk about health insurance, and there also I'm going to talk some most important part, that how you're going to increase your health insurance coverage without paying extra premium. That's all. Thank you. Have a nice day.